It's about that time of day again, folks. Welcome back to Nightly Newsletter, boys and girls. Joseph James here. It's Monday, January 4th, 2016. Damn, it feels good to be back in the saddle here with you guys and gals on our Nightly Newsletter. I hope you had a great holiday season. Hope you had a safe and happy holiday and happy new year. And man, it feels great to be back here. It's been way too long since the last time we worked together. Great to be back. You know, we get a new year here filled with opportunities, but new year, but the same plan. Every evening, Monday through Thursday, evening at 8 p.m. Eastern Time, we're going to do a little bit of review what happened today and then give you guys some strategies to look forward to in the following days. So without any further delay, did I mention it feels great to be back again? I hope you guys had a great holiday. Let's jump right into it. Tonight's newsletter, crude oil is trading inside a rare but very powerful megaphone pattern, which tells us to buy the lows and sell the highs of this expanding triangle tomorrow. Can't wait to show you that chart in a moment. We don't see that very often. S&P, how about the S&P? Finished the session looking very bullish this afternoon, and the sellers need to respond on the E-mini S&P. We've got some key resistance at 2010 on the E-mini tonight. If they're going to keep this price moving lower tomorrow, they're going to have to really respond to this 2010 area on the S&P. Gold is pushing lower this evening after the bulls took price higher in today's session, which tells us to look for channel rotation, measured moves, and a possible gap fill tomorrow. Get a nice, easy plan for all you gold traders for tomorrow's session. And of course, we can't forget about the euro, the currency future. The euro is bearish with a major channel, and we have a short-term spiking channel as well on the euro tonight, which provides us with plenty of areas to look for great selling opportunities on Tuesday. As you can see, we got a plan for crude, E-mini S&P, gold, and of course, we can't forget the euro. Before we jump in today's charts, though, I do want to remind you guys to make sure you're watching our video on our trading blog at sidewaysmarkets.com. If you're watching the video on our YouTube channel, that's wonderful. There's a link in the description of the YouTube video that'll take you over here to our trading blog here at Sideways Markets. Couple reasons why. First of all, upper left-hand corner, I would love to invite you to come out and trade with me as a guest. I got a free pass to come out and attend our live trade room. If you're not a member of School of Trade and you'd like to grab a free pass, upper left-hand corner right there. Lower left-hand corner, there's a spot to register for our nightly newsletter mailing list. Now, you'll never have to worry about missing another newsletter ever again. I need three things: name, email, and then make sure you check your inbox. I'm going to send you a verification email to make sure you give me approval to keep sending you these emails every evening. Right below the video tonight, you can download all the charts that you're going to see me using in tonight's video. How nice is that? Over on the right-hand side, you can register as a trial member. Okay, do not confuse that with your free pass. Those are two very different things. Grab a registration for our free trial membership, learn more about what it means to be a member, read real member reviews, and of course, don't forget, we've always got someone standing by 24/7, 365 to give you guys a hand. Enough of the chat here, right? Enough of the chatter here, JJ. Let's jump right in here. Now, looking at tomorrow's session, we've got Tuesday, January 5th. No major news on the schedule for tomorrow, so we do assume to get continued reaction to all the pandemonium that came out today. We had a lot of news headlines that hit the news media this morning and this afternoon. So I'm assuming tomorrow we'll continue to see more reaction to that, but no major news on the economic calendar tomorrow. So we'll be keeping our eyes and ears open as we open up our trade room tomorrow morning at 8 a.m. And don't forget, come out and trade with me tomorrow, 8 a.m. Eastern Time as an advanced member, or grab your free pass on our blog and come out and see me any afternoon. Now, starting here with crude oil. Crude oil is trading inside a rare but very powerful megaphone pattern. You could also call this an expanding wedge or an inverted triangle, right? It's a widening pattern. Lots of volatility when we see. This basically tells us to buy the lows and sell the highs of the expanding range tomorrow. The bulls will be looking for the new higher highs to buy pullbacks with a target up at the highs. If we can test the highs, then we're going to look to sell up around that 3860 area. We'll look to sell those highs, right, for prices to go all the way back down. Now, the bears are going to be looking at this as a bear flag, which tells us to wait for 3 pushes higher and then buyer failure to sell short back to the lows. But remember, if we get back down to those lows, though, we're going to look to buy those lows. So Now that we know the plan here for tomorrow on Crude, let's get this out of the way just temporarily. And let's take a look at how to trade an inverted triangle, right? Or what I call a megaphone pattern. Now, megaphones are really, really rare. They're very powerful, and you can really treat them like a trading range. Buy the lows, sell the highs, and of course, rotation. Now, the key to a good megaphone is to look for the third try. So, for example, if we have 1 on each side, 2, and then 3. Count the tests. 1, 2, 3. That's the one you want to sell, right? The third test is going to be the strongest of a megaphone pattern or an inverted triangle or an expanding wedge or whatever you want to use to describe this. Now, with that said, rotation all the way back down. Now count them again. 1, 2, and 3. We're going to look to buy that low. So now that you know, again, buy lows, sell highs, look for rotation from one side to the other, and keep an eye on number 3. Okay, that's the lucky number when it comes to these expanding wedges. Now that we know the lucky number of 3, now we know how to trade an expanding wedge. Now back to the chart. With me on this so far? Now, 1, 2, 3. That's why the plan, if we make it back to that high, and again, it's tough to tell exactly what price level that will be, but if you're a seller, right, or should I say, if we find our way all the way back to those highs, right, now we're talking. That's going to be a very, very high probability setup. Now, what about going lower, though? Going lower is going to be a little bit of a challenge. We have a flag. Now, you'll notice again, 1, 2, 3, right? As you can see here, we're going to look to buy the low. Remember, the lucky number is 3 on these wedges, right? Or these inverted triangles, if you will, right? Megaphone patterns, expanding wedges, whatever you want to call them. Okay? So buy the lows, sell the highs. Now that you know the basic fundamentals, we're expecting rotation back up to that high. So let's play this game. What if price goes higher? What if price goes lower? Well, first of all, we have going higher, because that's what we expect to happen before it goes back down again. You'll notice we have a bear flag, right? This is what we call a bear flag. Now, the lucky number in a bear flag is also 3. Okay, that's about where it ends, but this is also a lucky number 3. 1, 2, 3. We've already got the first 2. We're looking for one more. As soon as we get that third push up, now we know that the bear flag is ripe for a failure. We wait for price to pull back, the buyers can't hold it, and that's going to be your cue to get short if we have not made the full move back to the high of that expanding wedge. Make sense? So as we go higher, the short-term sellers are looking for 1, 2, 3 attempts to go higher. 1, 2, 3. That will be when you want to look for the next pullback to fail and sell back down to those lows. Now, if we get down to those lows, what do we do there? We buy those lows, or, of course, taking profit from our shorts. Now, the key to getting short in the short term is going to be looking for 1, 2, 3, but then you can't just sell right there. Now we look for the next pullback to fail, right? If the next pullback fails, that's my cue to get short. But what if the next pullback doesn't fail? If the next pullback doesn't fail, now we all of a sudden become very, very bullish on the way up to those highs. Each new higher high, we're looking for buying opportunities. Just don't buy directly into these resistance areas overhead. take your short-term targets there, and I'll be trying to hold a portion of my position up to the high of that range. Again, look for 3 attempts to go higher. It's a bear flag. If it holds the next pullback, you know you're a bull. If it can't hold the next pullback, right, you know now we're looking for price to finish the move back down to those lows, and then we'll be a bull. Okay? Makes sense from there? Perfect. So scenario 1, if we go higher, 3 pushes up, hold the pullback, we keep looking for buying opportunities up to test those highs. If we fail on that 3rd test and that pullback, right, we're looking for price to go back down to those lows. Difficult to tell right now what's going to happen. But tomorrow morning, bright and early, I'm going to open up my live trade room at 8 a.m. Eastern time, and we're going to find out exactly what the plan is live in real time. So make sure you come out and join me. Okay, as we can see right now, though, expanding wedge, rare but powerful volatility pattern. What's my gut tell me right now? My gut tells me that we find a way back up to those highs and then sell it right back down, but that's not what we know yet, right? That's what I'm thinking is going to happen for tomorrow. I'm going to wait for proof just like I described to you already in this video. Let's keep moving. Don't forget, come out and see me tomorrow. We'll do this all together on Crude. How about the E-mini S&P? S&P just finished the session looking very bullish this afternoon, and the sellers must respond right now, right? Calling all sellers, we need you right now, right around this 2010 area if they're going to keep this price moving lower in tomorrow's session. Now, the bears started the session with a spike in channel this morning. That's the big clue. Now we're testing the base of that bear spike in channel, which basically tells us this is where the sellers need to respond. Now the bulls, they're not looking too shabby either. The bulls are also showing remarkable strength. Look at the strength we see out of these bulls this afternoon. I mean, this is not a weak set of buyers here. That's not profit taking, folks. That is a very strong end of the session today. It's so strong that it has me thinking these bears are most likely just simply done below that 2,000 level. But again, my gut's not a trading strategy. In my opinion, the next pullback is going to tell the story. The next pullback, if it holds, very similar to what we just talked about on Crude. If that next pullback can't hold, this price is destined to revisit those lows. But if it does hold, now we have a spike in channel, and we're expecting price most likely to make a run back up to this 2030 area, right? If not, right, up to at least try to get there before that next pullback. Now, the key component on this chart right now is a spike in channel. Let's talk briefly about a spike in channel. First of all, we started the session on the S&P with a bearish spike in channel. Now, a bear spike in channel is a strength pattern, right? That's why it had to spike down. This bear spike in channel is a strength pattern, which tells me we definitely want to stay focused on the sell side. But what happens is those strong bears, they take their profit, and price will typically correct back to the base of the channel. That's where we are right now on the S&P chart. Now, what's going to happen is most of the short-term buyers are going to confuse this move with a bullish market, and they're going to try to buy that next pullback. In a bearish environment, that next pullback is likely not going to work, and when it doesn't, that's when the sellers jump all over those buyers again, selling right into their stop losses. So the most important thing on this chart for the S&P right now is the fact that we have a spike in channel down. Ready? Now I'm going to go back to the chart and look where we are right now. There's my spike in channel, spike down, channel down, and look where we are. We're right at the base of that channel. That's why I said it's go time for these sellers. These sellers have to respond here. Now, with that, though, also came and this I think is the most important clue that we got in today's session. This was no funny business at all. This is a very strong reaction from these bulls, right? Look left, and you can easily see there's not a single red candle except right here, right? That is not a wishy-washy move. This is not profit taking. This is strength from these buyers. So much so, combined with this big round number at 2,000, what looks like happened is the sellers got a little bit too overzealous here, but they couldn't keep it. And now the buyers, from what I can see, are going to try to run it back up to that 20-30 area, and they just might get the job done in the short term tomorrow. It's tough to say. This is the S&P, so it may have a big range day tomorrow, but it may not. A lot of movement today. This may be a relatively small range tomorrow, so we'll see what tomorrow brings. But right now, though, we have that bull spike in channel. Now, since you're an expert on these spike in channels, at what point would we expect the buyers to pull back? You got it. Right around that 96.5. What is 96.5? It's the base of that channel. So we're expecting a pullback here, back to the base of the channel. If they hold it, we keep going higher. If they can't hold it, we collapse right back down and revisit those lows. That's why I said the bear spike in channel says the sellers have to respond right now. But that short-term bullish spike in channel says, be careful. We can definitely expect to see some profit taking from these buyers. How far will it go? Likely back to that 96.5, right around that 2,000, 96 even. And then, of course, if they fail from there, we're looking for price to collapse back down to that low, right? If they hold that pullback, which honestly is what my gut tells me is going to happen tomorrow, it looks too strong right now. It doesn't look like the sellers, it doesn't look like this move to retest the base of that channel should be coming on profit taking, right? This move should be on profit taking. This is not on profit taking. And so if this move higher was on profit taking, you would see a lot more red candles mixed in there. You're not seeing those right now. So we expect the buyers to enter the market on the next pullback. This is where we'd be looking for them to fail if we're going to be a seller, or if it holds because we have a very strong reaction today, we're looking to buy that next pullback, right, as a bull. And again, we have some resistance areas overhead. Just make sure you don't buy into these resistance areas. Those are going to make for excellent profit targets with really an ultimate objective at revisiting where we started the session today back at that 20-30 even area. All right, guys, now you know the plan for the S&P. Don't forget, we love trading the S&P in our chat room every day. The chat room never closes here at School of Trade, so don't forget to log in as an advanced member. How about some gold? The GC is pushing lower this evening after the bulls took price higher in today's session, which tells us to look for channel rotation, measured moves, and a possible gap fill tomorrow. Now look closely. A textbook example of a multi-directional trending environment today. The bulls took price higher today with a perfect measured move in channel rotation higher. But then the bulls failed to keep control later in the session, and we clearly now have the bears taking their turn back in the opposite direction. The bears are looking for selling opportunities down to 1064.5 and possibly all the way back to fill that little tiny weekend gap, right? That little gap between the end of the day on Friday, right? And you'll see we never filled that gap down around 1061. If I had to guess, that's where we finish the session tomorrow afternoon. So bears, you guys are looking for a completion of the measured move back down. Short-term targets are going to be at 64.5. But I got to say, if we make it that far, we're probably going to fill that gap down at 61 even, right? Almost a spike the football, right? Just to finish the job off at the end of the session tomorrow morning into the early afternoon. Remember, gold finishes the day relatively early compared to the rest of the markets we trade. Okay, so bears, you're looking for down to 64.5, maybe down to 61.1. I'll have to wait and see what the proof we get on that tomorrow. Again, if you want my gut tells me we finish this session all the way back down to fill that gap. That happens. Very rare we get those gaps that hold open over the weekend. That's why it's so important that we understand where they are. The bulls. What are the bulls going to need right now? If you want to have any hope for the bulls right now, they're going to need to see a new higher high. But more importantly, though, that new higher high is not enough. it's going to have to hold that next pullback for me to treat the bulls with any respect right now, just because we've seen this a million times before. This is a straight textbook example of a multi-direction trending environment, right? We saw the measured move going higher. The bulls can't even come close to holding the next pullback. They collapse back through those lows, and now we're expecting to see a measured move going back lower. We saw something very, very similar on crude oil today on a much faster time frame, that is. Okay, so if you're a bear right now, just keep looking for those lower lows, sell those rips. If, of course, you're going to be a bull right now, careful. Okay, careful. I'm looking for a new higher high, then you got to see him hold that pullback. And of course, at this point, if the bulls do hold it though, at that point, now we look for a much larger measured move, and we'll give that to our students live in real time tomorrow once we know more information about that. But right now though, like I said, my gut tells me we're definitely going to finish up that measured move lower, and then hopefully we'll get a chance to find that gap fill right towards the end of the morning, right, if not the early afternoon in tomorrow's session. And then how about that euro? Finishing up here on the 6E, the euro is bearish with a major channel and a short-term spike in channel, which provides us with plenty of areas to look for selling opportunities on Tuesday. First, the bearish spike in channel tells us to look for selling opportunities after we test the 10,884 resistance overhead. You guys are experts on spiking channels now. Okay? Now, scenario 1, the spike in channel. We have our bearish spike in channel down, the first selling opportunity on the euro. You know where this is going to be, right? Go back to retest that base of the channel, and then we're looking for that next pullback to fail. That's the first opportunity, is going to be a failed pullback from the buyers to keep selling with this bearish spike in channel. Scenario 2 is going to be to sell the high of this channel. Notice this big major channel. Now this is what this honestly is, it's too easy. This is one of those times when I look at this and go, this is way too simple. Sell the high of that bear channel. That's really the most obvious trade that we have on this chart right now, right? I guarantee you most new traders right now are going to be looking to sell that channel high. That's why you should be very worried about it. I call this the neon sign trade, right? This is what I call the neon sign. That means there's a big neon sign saying, sell me, sell me, sell the high, sell the high. Now, again, I want to sell the high, but any time that this is the only, or this is the most obvious, or anybody and their sister-in-law can see this and know where to trade it, it's way too easy. And that means I expect a little bit of shenanigans up at these highs. So, scenario 2, because the channel is really all you have to work with right now. Look, it's the only real thing you can sink your teeth into. I'm sure that most people are not going to see the bearish spike in channel, right? You guys know that. Step number 1, that's the first option. But let's say that in scenario number 2, we make it all the way back up to the high of that channel. I'm suspicious. And because I'm suspicious, and again, why am I suspicious? It's not because it's a bad trade. It's because it's too easy. So what am I going to do? I'm going to wait to see a pullback fail, just like we talked about for the first scenario. So we go to the high. I want to sell the high. But let's see those buyers try to hold that first pullback. If they can't, then we look to sell. But I'm telling you right now, though, this is like postcard picture perfect. That means there's got to be something more, or there most likely is going to be something more. So let's say now scenario 3, which honestly is what I think is probably what's going to happen if we get to that channel high. Okay, first of all, recap, scenario 1. Scenario 1, we get that bear spike in channel. Right? That bear spike in channel means we can go as high as the base of that channel. All we need is for some pullbacks to fail. Right? You sell right into those failed pullbacks. Basically, you're catching the buyers by running them out of these trades. Okay? Scenario 2, we go all the way up to the high of that channel. It's picture perfect. I'll only sell if the buyers can't hold that pullback. Okay? That's scenario 2. Scenario 3, now let's say that what I think's going to happen does happen, right? We hold that pullback. We run out all the weak hands, and I call them weak sellers or weak hands at those highs. Again, not because this is not the right place to be selling, but because, again, the average new trader is going to look at this chart and go, oh, I know exactly what to do. I'm going to sell the high. Wah, wah, wah. Alert, alert, alert. Rookie traders know exactly what to do tomorrow. I should be careful with that, right? Makes sense? Now, assume it goes higher. Once we push higher, the ideal scenario, right, is to get to those range highs. But again, same thing, right? Looking for pullbacks to fail. Looking for pullbacks to fail. The ideal scenario is going to be to sell up at those highs, right? Go back up to the highs, look for the next pullback, and then sell the failure of the next pullback. There's no doubt about it. The bears are in control right now. The question is, are we looking for a failed pullback here? Or should I say, are we going to get a failed pullback here to sell in the short term? Are we going to get a failed pullback off the highs to sell in the medium term? Or if we do make it all the way to those channel highs, what I expect to happen is they hold that pullback, they run out all the easy sellers off the highs. I'm looking at you, all the new traders out there, right? So be careful. And then we look in the longer term, right, to sell the failed pullback after we run out, right, those weak hands at the highs, with the ideal scenario, of course, being to sell as high as we can possibly get it tomorrow. Now, if you're a buyer, right, if you're a buyer, what I'd be looking for the buyers out there, if you want to be a buyer right now, is to basically do the exact opposite. Look for price to pull back, look for sellers to try to sell a retracement. If they fail, that's your cue to be a buyer. So right now, the euro is so simple and straightforward. You've got to wait for the opposite side to fail to get the juice, right? To get the juice. Guys, don't forget, we teach all of these failure patterns and these, what I call the neon sign trade. I teach all this stuff to all of our students. So now you get a plan for the euro tomorrow. Again, looking to stay short on the euro. We've got the gold here. Again, another bearish market on gold. Unless, of course, what? The bulls are going to have to really show some strength, new higher high, and hold that pullback. If you're going to be a bull tomorrow on the S&P, again, calling all sellers, you've got to hold here right now. The sellers have to hold this. And again, that next pullback is going to really tell the story for all you S&P traders. If it fails, we're going lower. If they hold it, get ready to go back to 2030 tomorrow. And of course, don't forget about our good friends here on Crude. This should be an interesting one on Crude. We get a lot of fundamental stuff going on right now in the Middle East right now, but you know me. Turn off the television, get rid of all the Bloomberg.com, and focus on the chart. The chart's going to tell you exactly what to do tomorrow. And if you don't know what to do tomorrow, come out and join me. The trade room opens up tomorrow morning at 8 a.m. Eastern time. Remember, look for those 3 pushes higher on this bear, right, on this bear flag. And then look for that pullback to fail, to sell back down to those lows. Then that's 1, 2, 3, and then we'll look to buy that low back up, right? If they hold that pullback after the third, we're going to make a run back to those highs. And then remember, 1, 2, 3. Ooh, I can barely wait for tomorrow morning. It's going to be an exciting one, as always. Guys and gals, before I let you guys go, I want to thank you so much for sticking around with me here this evening. I know this is going out a little bit late. It's my first day back. We've got all kinds of stuff happening across the globe right now. I hope you had a great holiday break. I hope you had a happy new year. I hope this 2016 is better than ever for you so far. And if I have anything to do with it, you'll be hitting new equity highs in your trade account every single day with me in our live trade room. Don't forget, grab your free trial on our website. Learn more about our beginner, intermediate, and advanced levels of membership. And don't forget, guys, I've always got someone standing by 24/7, 365 to give you guys a hand if you need anything along the way. My name is Joseph. Be well out there. Be nice to each other, will ya? It's a brand new year. And I'll see you guys same time, same place tomorrow evening, if not tomorrow morning in our live trade room. It opens up at 8 a.m. Eastern time. I'm out of here for now, guys. Excellent job today. We'll see you again tomorrow. Adios, amigos. Bye-bye for now.